Snapchat, as you said, Danny, slammed 30% after hours, cutting their earnings forecast for the second quarter and warning, dragging down the other social media companies, Meta, Twitter, Pinterest, all on the block. Juliette Saly has that in Singapore.
Yeah, Matt, Snap was one of those companies that really benefited during the pandemic when everyone was at home looking for entertainment. But now Evan Spiegel, the CEO, saying in a memo to staff obtained by Bloomberg that they're essentially facing the same challenges that most companies are facing. That is labour disruption, supply chain shortages, the impact of the war in Ukraine. And their second quarter forecast, as you say, lowered, and it was already below analysts' forecasts. And now looking at 20 to 25% year-over-year revenue growth, also announcing a slowdown in hiring. They're looking to fill 500 roles by the end of the year. That represents about a 10% growth for the remaining 7 months of the year and is much lower than the 41% year-on-year total headcount growth that they have had over the year. Now, Dan Suzuki, Deputy Chief Investment Officer at Richard Bernstein Advisors, telling Bloomberg that the companies are really having a lot of difficulty trying to bring these unattainable, unrealistic investor expectations down to earth when you've got companies competing for ad dollars at such a challenging time. And this warning from Snap just follows in the likes of other big tech companies that we've already heard from. We've had Meta, Facebook's parent, cutting spending plans, Twitter saying that they've announced a hiring freeze. So that near 30% drop that we saw in after-hours trade on Snap weighing down a number of these big tech companies, underlying growth for these companies slowing as they mature. And of course, it gets more competitive to really try and attract these ad dollars.